Rob, BHP Billiton shares up over 5% at one stage this morning. I think they've come back a little bit, but it looks like investors are welcoming the fact that the Canadian government has blocked this bid, or what looks like it's blocked this bid for potash.
Yes, I think from the investor side it was a very big transaction for BHP Billiton, and they were worried about how much debt they'll need to take and was it going to come out, where they're going to get the cash from. So I think investors now think that they're sitting on a big lump sum of cash, and will they go for other acquisitions or will they start to buy back their shares? And a lot of people think that they might have a share buyback and people coming back to buy those shares.
Of course, they still do have 30 days to come up with a better proposal for Canada and really for the net economic benefit they can give to that country. It looks like this is something they might still pursue. What's your view on that, Rob?
Difficult to tell. I think on the price level they won't really change the pricing, so it'll have to be somewhere how they restructure the deal, how they bring maybe more assets into Canada, how many people they're going to employ. So maybe if they get around those difficulties, they've got 30 days to look at it. I think it is an acquisition that they really do want, but I don't think it's going to come from the pricing side.
It looks like really chasing big acquisitions, they are meeting regulatory hurdles, BHP Billiton. How about going for something smaller like oil and gas where they're not so dominant in the market? Do you think this is a possibility for the group?
I definitely think they are. I think obviously with BP earlier there's a lot of assets that are on sale on the oil and gas side. I think the exploration there, there are lots of fields that can be explored as well. So it is a part of the business that they can grow. It's not their core business, and you really want a company to stay with its core business. So I think they can do smaller acquisitions on the gas and oil side, but they do want to look for very long-term mines that last 30 to 50 years. So they will look for oil and gas, but they also need some more mining assets as well.
Of course, BHP Billiton leading the gainers on the JSE today, but the rest of the market's also looking pretty positive and following through from that quantitative easing package that was unveiled by Ben Bernanke, the Federal Reserve Chairman, last night. It looks like the markets do like that.
Yes, they did. I mean, on the short-term level, there's more liquidity. It was $100 million more than they were expected, so $600 million, which is a big number. And in the short term, that money has to start flowing somewhere, and it goes back into asset prices, it goes back into the stock market. You see the dollar weaken as well, commodity prices lift up, so all the markets around the world will get more liquidity and the prices are going to carry on moving up in the short term. Obviously when inflation starts, the Fed's going to have to see how they're going to manage that. But at the moment we're in a deflationary environment, very little inflation, and I think that quantitative easing is the only way to get the economies moving forward.
Well, Rob, as you view, they're really just delaying the inevitable here. So we can look forward to these asset purchases right up until the middle of next year. What happens then? Are we still going to see this pullback on the markets? Because this is going to provide some short-term support, isn't it?
It will definitely give support to the markets. I think when they stop the easing is whether unemployment has come down. We saw yesterday that the private sector did hire 43,000 people in the US rather than the 20,000 that everybody was expecting. So I think if the quantitative even lasts till next year and it changes the unemployment rate, and unemployment has come down and people are really doing real spending, not just cheap money spending, but they're starting to spend on their houses as well as just normal purchases, then I think they've done the right thing. However, if they get to that point next year and unemployment is still very high, then there's going to be a problem.
Of course, we are getting that monthly official jobs data out tomorrow, as well as non-farm payroll numbers. I suppose that's something the market's going to be focusing on quite closely.
Yes, I think after the private sector numbers yesterday, I think they're expecting really good numbers to come out of the non-farm payrolls. And I think that will be the crux to see if this US economy can have a sustained improvement rather than just quantitative easing. So we are very closely looking at those numbers.
We had some numbers out from Old Mutual this morning. That's their quarterly figures. It looks like life sales not quite as good as expected, but unit trust sales looking pretty good at this stage. Your view on those numbers?
I think that funds under management were up 8%. That's good. They're now managing about £307 billion. So you're looking at close to $1 trillion. So very good numbers in that respect. Life insurance in South Africa has been slow, and I think it just showed you that the South African economy is really battling and the consumer is still indebted, and there's still a little bit of outflow coming from them on that side. Overseas, a little bit better, but are still under pressure with sovereign debt issues. People worried about pension funds, so they're not really putting too much money into the life insurance industry there. But the numbers are improving, and they're coming from, they've stopped getting worse. So I think looking forward, it was a good set of numbers. The market seems to like it. They're nearly up 2% early in the day today.
And of course, it says it's still on track to make the business a bit leaner despite not selling Nedbank to HSBC. So I presume that's still going to be a focus of Old Mutual going forward.
Yes, I think obviously they want to clean up their book and they want to manage just life insurance so they can focus on what they do, their core functions. I think they're going to support Nedbank going forward. If another seller does come, they will look very closely at it though.
We had Truworths coming out with business updates as well. Shares up over 2% this morning, so those numbers also looking quite good.
Yes, the retailers just keep outperforming. People think that they're fully priced and they can't do much better than they are. But the numbers suggest something else. Increased margins are really what people are looking at. They've got very strong rand is helping the retailers. They're importing clothes and goods from overseas. Inflation, Truworths said, was only in at about 3%. And that margin differential between the very strong rand and what they're selling their products at is getting wider. So the retailers just continuing making really, really good money. Market likes it. I think it's getting up to new highs again, up to nearly 2%. So as long as that strong rand, it's not bad for everybody, and the importers are really doing well with that strong rand.
Of course, we have, as you said, those shares up over 2%, trading above 74 rand at this stage. And these shares are looking quite heady at these levels. Would you be a buyer of Truworths at over 74 rand?
If you've missed the up move, it's very difficult to get at these levels. But as I said before, the quantitative easing leaves money flow coming into South Africa, and the emerging market currencies getting stronger. And if the rand staying below 7 for instead of 1 or 2 months now, but maybe it could be for a year and a half, as this quantitative easing around the world, importers are going to continue doing very well. So it's a difficult call, but I think you still have to definitely have retailers in your portfolio. So if you've got no retailers now, you still need to add that to your portfolio.
Rob, Goldfields quarterly numbers, production up, costs down, but it looks like it is still being affected by the strength of the rand.
Yes, very good numbers. It's very good to see that finally they're getting some costs down, cost improvement in South Africa as well. They've cut the workforce by about 4%. That's around the world, not just in South Africa. So the cost structure looking good. I think the cash costs now about just under $700 an ounce, and looking very positive. Looks like they'll get their target of 3.6 million ounces for the year. So looking very positive. They've got some really good projects in the Philippines coming through. So looking very good. We've got a target of 130 rand, so there's still some upside for Goldfields even with the strong rand.
Of course, we've seen the rand strengthen even further following that quantitative easing package last night. The gold price also going up $1,363 this afternoon, with the rand down at 680. So really a headwind for our gold producers.
Yes, it is. But not all of the gold that they're producing is in South Africa. So some of their gold is obviously offshore, and they're making really good returns on those other investments. As long as they can keep the costs down in South Africa, they should be fine as they're getting those really good profits coming from the overseas mines.